It was a surprise no one had expected. Now, the RBI Governor, Raghuram Rajan, surprised everyone today, leaving all key policy rates unchanged, notwithstanding persistent high inflationary pressure. The decision to keep rates unchanged will be a big breather for the industry and retail borrowers in particular, as the markets had expected another 25 basis points hike in the short-term lending rate.
Big year-end surprise, the Reserve Bank of India has kept key interest rates unchanged. The central bank kept both repo and CRR unchanged. Repo rate stands at 7.75%. Repo rate is the rate at which bank borrows money from RBI. Reserve repo rate stands at 6.75%. Meanwhile, the cash reserve ratio, or the amount of money which bank would have to park with the RBI, stands at 4%. And here is the reason why the central bank key interest rate remained unchanged.
We are trying to calibrate monetary policy primarily to target inflation in an environment where the economy is weak. So when we take action, we have to be convinced that the action is merited at that point, which is why we're waiting to take action. This is, in some ways, I mean, if you want to go into theory, this is brainards. When there's a lot of uncertainty, you want to wait for more data to come in to get a sense of how you want to act. The precise calibration of action, remember that any monetary policy action is determined by a variety of variables. So if I tell you if it is X, we will raise the rate by Y, I can't tell you that because the rate decision depends not just on a particular indicator but a variety of indicators.
A surprise? Yes, a surprise. I must admit that I was praying that he would finally hear the voice of industry, because we have consistently been asking that interest rates be brought down. So definitely a surprise, and I like your term, Secret Santa, yeah. But at the end of the day, it is going to be more than just about the repo rate. This at least puts a halt to what was looking like a repo rate move up, which would have clearly meant that interest rates would have stayed high. We need to see transmission from the rates that banks charge to companies and what companies are therefore being able to borrow. And in fact, the issue has been that even at the time when Governor Subbarao began to bring rates down in his baby steps, our surveys have shown that industry's interest rates actually went up on average, and in fact the middle and small sector industries saw a higher increase over the rates. So it's not just enough to have the repo rate comes down.
You know, high inflation is driven largely by food inflation, and that too mainly by vegetables and food. So I think keeping in mind the need to give the economy a stimulus and not wanting to take too hasty a step, the governor has surprised markets. Markets were expecting a hike. He's expressing confidence that the price inflation will come under control.